morning, everyone. I'm Corinne Decker. I am with Midwest Regional Bank. I'm glad to be here today to talk to you a little bit about financing your business, and I'm going to talk specifically about SBA financing today. That's kind of been my niche. I've been working various different places for the better part of the last 10 years doing SBA loans for small businesses. So I don't think it's any secret that obtaining financing, if you're a small business, has not been an easy task, especially over the last few years. With the downturn in the economy, with the banks pulling back and really not having any appetite to lend to small businesses, it's really been a challenge for these companies to get the financing they need to start up or to expand. Now, thankfully, the markets have recovered some, and banks are now finally starting to get back in the game, interested in lending to small businesses, which is good news for all of you because it creates a better atmosphere, a better environment for lending. But still, SBA loans are really important. The U.S. Small Business Administration created a variety of different loan programs specifically designed for small businesses because they knew that of all of the corporations, businesses out there, the smaller businesses have the biggest challenge in obtaining financing. So they designed a variety of different government guaranteed loans for for-profit small businesses who needed loans between $50,000 and $5 million. And so these are really what these loans are designed to help. And there are lots of different types of SBA loans, but because of our short time frame today, I'm only going to talk about the two most popular. And so I'm going to start with the 504. This loan is an excellent program. It's kind of a unique loan because it's done in partnership with a bank and a certified development company. This loan helps finance businesses who have a need to purchase fixed assets. So anything you can touch and feel, tangible things like buying a building, maybe new construction, maybe you're going to lease some space and you need to build that space out. Those are the types of projects that are a very good fit for the 504. This is a great program because it offers the small business owner a long-term fixed rate, a low down payment between 10 and 20%, which is really good because if you go to a bank and you try to get a conventional loan, they're going to ask you for 30%. And a lot of small businesses don't have that amount of cash, ready cash, to put into a project. So decreasing that by 10 to 10% or 20% can be huge. It's the difference between getting something done and not being able to do it. And then we partner with our local CDC, in this case, Jim Hampton here with the Clay County EDC and Midwest Small Business Finance is a great local CDC. They're an agent of the SBA and they finance part of the project in partnership with the bank. We do this together and the result is you get the financing you need on better terms than what you would find conventionally. The 7A loan is kind of what I like to refer to as the finance everything in the kitchen sink. It's your catch-all loan program. It does everything that the 504 does, but it also finances leasehold, or working capital, inventory, goodwill, intangibles, those types of things. So if you have a project where you have a variety of different needs, the 7A loan program might be a really good fit for you. In addition, we can do business acquisitions, partner buyouts, and like any SBA loan, we finance startups and business expansions. So it's kind of a very good catch-all loan program. And we can actually do a 7A loan for working capital, inventory, goodwill, and then a 504 for the real estate. So you can combine these loans too. What are the advantages of getting an SBA loan? You will most likely always get a longer term. Banks are going to want their money back as quickly as possible. So that means a shorter term for you, which means a higher monthly payment. By extending that, you're going to have a longer time to pay back your loan, a lower monthly payment, more cash for you to be able to use on a day-to-day basis. A lower down payment, 10 to 20%, and then because on these, whether it's a 504 or a 7A, the banks are going to have more security. They're going to get a guarantee that in the event that the loan defaults, they're going to be covered, which is huge for you because it takes away the risk that the bank perceives as there, especially with startups. So whereas we might not be willing to lend to a business that has never had any experience doing widgets or whatever else, we might consider it if we knew that the government would step in and back our loan, and the risk there of investing then as a bank and partnering with you is so much less. And if you finance the 7A loan program, if it's over a 15-year term, there's no prepayment penalty. So if you do really well and you do gangbusters the first 3 years, you can pay off that loan and you're not going to be levied any fees for paying it off early. So who is Midwest Regional Bank? It's a bank you've probably never heard of in Kansas City, but we're the #1 SBA lender in the St. Louis region. We've come into the Kansas City market recently because we want to do the same thing here that we did in St. Louis, which is help more small businesses get the financing they need for their loans. And most of our loans are SBA. We have a dedicated and experienced staff of SBA lenders that know how to get you through the process quickly and easily. We try to work with you to answer all of your questions. We partner with our local resources, folks like Ed over here at SCORE, Jim over here at the Clay County EDC, to work together to try to get you the financing that your business needs. We have 4 lenders in Kansas City: Jeff LeBar, Mike Constant, Chris Sorensen, and myself. Feel free to call us at any time if you have any questions. Even if we can't help you, we'd like to point you to somebody that can. So, and I'm just trying to get our name out there, let people know that we're here and willing to help you in any way that we can. Thank you for your time. Does anybody have any questions? Right, so you have to be a small business, you have to be organized for profit, primarily doing business in the United States. But a small business can actually be fairly large and still qualify for an SBA loan. So it could be anything from a mom and pop company to what most of us would consider to be a pretty large operation, If you're a startup or less, so for a startup, it's going to be really important that you have a business plan when you come to a bank. Is that kind of like the route you're asking? Okay. You're going to need a business plan that really discusses not only your marketing strategy, what you want to do, but also includes a set of financial projections. Especially for those first 2 years, it's really important. So a month by month, even that first year is really important. You're going to want to have an idea of how you want to incorporate, so whether or not you want to be a corporation or an LLC, who the ownership is going to be. Those kinds of things are really important to kind of have nailed down. And you're going to need some money. I mean, I hate to break it to you, but it's just the truth. There's very few banks out there that are going to do 100% financing, especially for a startup. So you're going to have some cash set aside and put away just for this project. And I would say anywhere within probably about a 20% cash injection is what most banks are going to look for on a startup. So, that might take some time to put together, but you can, if you don't have all that yourself, you can partner with other folks, you can get investors, you can, borrow some money to use as your down payment. There's a lot of different options there. Yes?
Are you guys a preferred SBA lender?
We are not. And the difference there is volume, so
Okay.
it's the amount of volume that we do.
One of the things that you listed that you would look for is goodwill. What do you mean? What's your definition?
Well, business lists, I mean, it's blue sky. When you have a business that doesn't have any tangibles, you go off of customer lists and, you have a book of business is really what I mean by that. And there's a value attributed to that can be financed.
I was wondering how you see the number of loans that are being made now versus a couple of years ago. Is it getting a lot better? Or how do you see it?
It's getting a lot better. I have to say, I'm disappointed in the growth trend. I really thought the banks would be a lot more active at this point than they really are. I'm still finding a very reserved lending climate, but it is a lot better than it was 2 or 3 years ago. I mean, most banks were just not lending money. They were circling the wagons. They were just trying to keep their portfolio performing. They really weren't looking for new business. Now, finally, we're getting out there and talking to folks again. So I think it's a very positive trend. We are lending money, we are making loans, so that's very good. Any other questions? Okay, thank you for